Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse and click that subscribe button below. I'm super excited for today's episode. Joining me, we have Tom. You can find him on Twitter at Savings Captain. Tom, go ahead and give yourself an introduction.
Hey, Dave, thanks for having me on today. Really appreciate it. Really enjoy your content both on YouTube and some of the more entertaining tweets that you send out
Nice.
on Twitter, man. We really appreciate it out here. You keep it informative and you keep it light. So, yeah, I'm Tom, the savings captain. Just to introduce myself to you, I am a veteran of the financial services industry. I call it a 32-year tour of duty in financial services, primarily working with just regular, everyday individual investors. I'm one myself. I always say that I don't know it all. I've seen pretty much it all, but I don't
Yeah.
know it all. I learn something new every day, man. And when it comes to money, when it comes to mistakes, I've seen them all, and I've made more than a handful myself, and I'm still here standing,
Yeah.
as the video proves it today, man.
Awesome. So, first, I want to talk about that 32 years ago. So, by my math, that's 1991.
Turn back the clock, right?
Right. I've had a couple other guests who have talked about what it was like investing in the 90s, and myself, I know what it was like trying to invest in the 90s. And just recently, just this past weekend, I had who I call the young guns, these
Yeah.
super great, so knowledgeable young adults, late teens, early 20s. And I'm like, you guys don't know how easy you have it. All the information is at your fingertips on your phone. You can, download an app for free. You can get all the information from YouTube videos and Investopedia and ask people on Twitter, and all the information is right there for you. And I'm like, 30 some years ago, we didn't have the internet and we didn't have free apps and we didn't have anything. So
No,
I,
you're
I
right.
guess let's start at that. Like 1990, did I say 91? Like let's just start right at the beginning of the journey.
So in 1991, yeah, you're hitting a nail on the head. Especially like you said, the young guns, they have it technologically easier today. Everything's at their fingertips. I remember back in 1991, I was what was called a stockbroker. You know,
Yeah.
Picking stocks. I would call people up. I would actually cold call people, right?
Wolf
And
of Wall Street style.
the first firm I started with, I always call it. It was Wolf of Wall Street, maybe the R-rated version. But it was a lot like that. But you hit it right on the head, Dave. At the point, we held the information. We held the information. We could portray it however we wanted. Clients would call in to get a. Can you imagine this? They would call in to get a quote on a stock.
Yeah.
That's crazy. Crazy to think. That's how much information we controlled. We would basically look at the Wall Street Journal and just read stuff to to clients. So things change. That's the way it was in the 90s. And it was great to actually work through it and see the change.
Yeah.
Like by the time the mid 90s came, there was like the advent of the internet.
Yeah.
So, you always have people that are the early adopters, and they started doing online trading. And oh my gosh, they were skipping the stockbroker and putting an online trade in for $49.95. Can you imagine that?
Instead of 60 or $70, right?
Yeah, I remember some of my good clients. Like, yeah, you're a good client. I'll only charge you $100 for your idea. Can you imagine that? So I saw
That
that
would not fly today.
by like 98, I would say that's when mass adoption really took place.
Yeah.
That's when it really took place. But from all the thing I'd say that's changed the most, yeah, the technology's there, but I would say the same fundamental thing exists today that existed 30 years ago. Just because people have the tools and technology, I have the tool of technology, but if you don't know how to use it, if you don't have good, saving and investing habits,
Right.
that ain't gonna help you. That ain't gonna help you one bit.
Yeah, that's a great point. So I guess let's talk to that point of the fundamentals that have are still there. Were there in 1991, were there in 1981, 71, 61, 51. Go back as far as you want. Those fundamentals, and yourself in that position of, I always say on here, not financial advice, but you're a financial advisor. You can literally say financial advice.
Yeah. Well, I'm a former financial advisor. So now the funny thing is, 6 months ago, if you and I bumped into one another, I couldn't, I really couldn't even. That's the crazy part about it. I'm a, I had 7 or 8 securities licenses in the US, my CFP designation, but I really couldn't do a podcast or
Right.
message like this because any of my employers would have said, "Oh, you're giving financial advice on YouTube." But I'm a little more at free reign now, and I love it. I call it Tom, the savings captain unplugged. I can really talk. I'm
Yeah.
more at liberty of what I've seen, backdrop of the industry.
Wow. So yeah, again, I guess let's just, before we get into more things, I kind of want to move through a little bit more of your backstory. Like you said, 98 was a little bit more mass adoption. And then obviously, in the 2000s, early 2000s, we saw a lot more online banking, the banking platforms providing trading platforms within their online banking. And then moving through into more recently, where now we have these apps on our phones and you can download for free and trade stocks for free. So
Yeah,
I guess just maybe kind of speak to the, sort of like what I just did, a little bit of what you saw over the decades.
sure. So I think to me, what I've seen, the technology has maybe changed, but that's the science, that's the technology behind things. But it's interesting. The people have changed, but the emotions, they stayed the same generation by generation. What I mean by that is the same people that got caught up in things like day trading back 30 years ago, it kind of just reinvents itself. It's the same things that get passed down generation by generation. I,
Right.
that's changed it all, Dave. When you start looking at, if you think about it, every person has pages and pages of apps on their phones. They might have some financial stuff, but I would say just and this is not your audience or maybe the audience that I deal with, but I'm talking mass audience, right? They're
Right.
not much better equipped, in my opinion, than they were in 30 years ago before this technology existed. And why I say that is you get stats out there like 60 something percent of people, this is true in the United States, probably true in Canada and any developed country, they can't bear a uh, unexpected financial bill of like $400. Why
Right.
is that? The app didn't take care of that. It's,
Yeah.
you got spending, and that same I'd say it might actually have gotten worse, in my opinion, because now you can spend your money quicker than you could 30 years ago.
Yeah, for sure. Right.
I don't know. That's my observation anyhow. Yeah.
So a couple points there, yeah. With the technology, sure, the information is there, and I know what you mean. Like you can spend money very quickly nowadays, like DoorDash and Uber Eats and all sorts of other, Amazon. It's very easy to go on Amazon and
No
spend a
doubt.
lot of money real fast. I've done it. I'm sure we've all done it, right?
Yep.
Um, and also to your point of, not having, all of a sudden your car needs new brakes or and all, that's 4, 5, $600, and it's like, you should have $500 set aside for something like, brakes on your car, kind of important, right?
Yeah,
Brakes are pretty important. Just as
exactly.
an example.
Yeah, I think that's exactly right. So I mean, it's funny how the technology changed, and I've seen it over 30 years, but the same result is exactly there. We have more impulsivity, I think, to buy things,
Right.
and it doesn't leave us better equipped to actually do things. I talked to one person the other day, and it was like, I hate to say, they didn't even know what a savings account was when I was talking about like high yield savings account. Are you getting, here in the US with the rates going up, 4% is what you're getting just on a savings account.
Yeah. Which
Virgin.
would, like, just 5 years ago, that was unheard of. Like, you'd be lucky to, well, here in Canada, you'd be lucky to probably get half to 1% on a savings account, right?
Yeah. My last employer on our in our brokerage account, we were paying, it was either nothing or 1 basis point on free cash. And that was just like 3 years ago.
Yeah,
Yeah.
amazing. You did mention one other thing that I want to kind of ask about day trading 30 years ago. How did people day trade in the 90s?
That it was one, it was expensive
Yeah, no doubt.
because if they were dealing with a true stockbroker, they were paying a lot of clients that were active traders would probably have what was called a negotiated rate with their broker. See, in 19, I think it was, I might be off a little bit, Dave, but about 1973, give or take a little bit, Charles Schwab was the first company that offered what was called what we know of discount brokerage. Back in the US before that, it was a regulated amount by the government, by the SEC, of what a broker had to charge. And then you started getting price competition. So that was the initial thrust of commission rates coming down, but it was pretty expensive. The big phrase was trade it, buy it, and sell it to make a point. That was it.
Wow.
Buy something at 20, punch it out at 21. You bought 1,000 shares of it, maybe $100 on each side of the trade. Plus, then you have capital. So this is where it gets expensive, right? Oh,
Yeah.
then you got to settle up with the government at the end of the year. If you make gains, I can't remember what the capital gains rate was back then in the U.S. It was probably 25% in the 90s. Think of all the money you're spending for the risk you're taking.
Yeah, wow.
Um, where today you have that level of accessibility, it's free. You can still take the same level of risk. You still have some capital gains. They're lower now than they were then. You're probably trading for nothing online, but you're still taking a lot of risk. That risk is
Right, right.
there. And I would say in 30, I would love, I don't want you to get a bunch of comments or trolls or flamers. In 32 years, I
Mhm.
would swear on a Bible, Dave, I have never seen a person make money at day trading.
Yeah. It's a tough go, right? Like, it's a very tough go, and I don't recommend it. Again, not financial advice, but I've I've never tried it. Thank goodness. It's one of probably my smarter decisions in life.
If I were wearing my, if I were wearing a cap like I usually do, I would tip my cap to you for saying that. That is great.
Yeah.
I have tried it. I'm a reformed trader.
I'm a reformed day trader. It's
I'm a
like,
reformed day trader. I'm a
"Hi,
dividend
my name is
investor,
Tom, and I used to be a day trader."
no doubt. Um, I'm an index investor and a dividend investor with 95% of my invested assets. I still speculate on about 5%. Yep, I own a little bit of Bitcoin. I think that will be the only crypto that really has a chance, but all the other stuff, in my opinion, speculation. But Dave,
Right.
I'm kidding. I have never seen a person survive day trading. Never. They have a great 6 months, a great year. It's like going to Vegas. Sure,
Yeah.
people DraftKings betting on sportsbook. Sure, people win. Do
You
it.
get
We
on a roll, and you think that roll's never gonna end, and then all of a sudden, it comes crashing down real hard, right?
sure does. Yeah.
Yeah. That's actually a great segue because you kind of mentioned your investment style, your personal investment style of index funds and dividend investing. So that's definitely playing right into myself and my viewers and listeners, my audience. As we're the passive income posse, and we love to watch those dividends roll in every month, every quarter, whenever they show up. And there's nothing better than waking up in the morning and seeing a notification on your phone that company XYZ just deposited ABC amount of dollars or 123 amount of dollars into your brokerage account. You're like, all I did was wake up. All I had to do was wake up this morning and I made money, right?
Um, I love one of your tweets. I think it might be your pin tweet that says something like that. The best
Yeah.
job you had was
when companies pay me to not work for them. It's
Yeah,
paraphrasing, but yeah, it's to that effect. Yeah.
yeah.
So
So
let's get into some of those companies that you like, in your portfolio, or any sectors or anything that you've held for 30 years or 20 years, or
yeah,
a sector that you're more focused on now than you were
yeah,
10, 15, 20 years ago.
yeah, yeah. Definitely. I should probably step back.
Oh, what happened to Tom? Where'd you go, Tom?
Transformation take place. I worked at, and this is probably a a favorite company for a lot of both of our audiences. I spent 14 years working with Vanguard,
Right.
and I worked at Vanguard, and that changed a lot of my temperament around long-term investing. Like I I worked with the founder, John Bogle, met with him and worked with him on several occasions. Just a great man. So you start getting infused. It's almost like a cult. You get infused. So, yeah, you know what? All the day trading I did, David, I made some pretty good money. One time, I'm not going to kid you, I bought a stock at 1 and it went to 34.
Nice.
That's a pretty nice hold. It
Yeah.
was actually a Canadian company. You might know Jones Soda back in the day. Um,
Yeah.
and they had a really good story. But any of those stocks, you had to you had to get out. The barn door would close pretty quickly. You had to get in and get out. And I'm like, this is
Right.
insanity,
Right.
right? Like even when you're right, you have to be quick about it. You know what I'm saying? You had to
Yeah.
be in and
Yeah.
out. So I was like, I had to transform this. So right about the time I started working at Vanguard, I was married a few years, and then along came my daughter. I became a dad. So I had to had to grow up quickly, and so did my portfolio. And I remember the first dividend paying stock that I bought. I always dissuaded clients from dividend stocks. Like, why buy a dividend? You want a measly 3%? Don't invest with me if you want 3%. I'm going to be your capital gains nightmare. I'm doubling your money. We're not going for 3%. But so I bought Coca-Cola for the first time. I bought it in a drip. I bought it personally, and I bought it for my daughter in what we call an UGMA account. And she's now 21 years old, and she has held that stock. And I'd add $50 here, $50 there. And I remember the first year, it was like, oh, you got a 39-cent
Yeah. Yeah.
dividend,
Dividend. You're like,
quarterly
oh, what's
dividend. Then it would grow to a
39 cents gonna
dollar,
do?
then to
Like,
two
even back
dollars. And
then, you
don't you
couldn't
know that
buy a
rascal
coffee.
now, including myself, she gets I don't know what it is. It's getting close to 2 shares every quarter of
Nice.
Coca-Cola, $120, and that was just achieved early on, 20 something years ago. $50 here and $50 there. Really opened my eyes, Dave. I was like, that's a lot easier than trying to pick these trying to sustain a whole portfolio picking stocks. And then, simultaneously, I'm at Vanguard. I got my 401k invested in index funds, an IRA invested in index funds. And I'm like, yeah, you know what? I can see the general path here. I can break this code is generally up. That's
Right.
the direction I want to go. I don't have to
Yeah.
worry
Yeah.
about getting out,
And
anything
you
like
sleep
that.
well at night. You look at those going, hey, over time, like over the last 60, 70, 80
So
years, 100
that's
years,
really how it changed
Coca-Cola
for
has
me.
just consistently gone up and up and up, and paying that dividend. I'm if I'm not mistaken, Coca-Cola is a dividend aristocrat as well,
And I
right? So
just
they
lost your audio there, Dave, if you can hear me.
I can hear you okay. Yeah. Can you Am I back? Can you hear me? I'm not sure what happened there. I was talking about the Coca-Cola
Dave, I'm
arist
sorry. I can't hear you.
Oh, this is unfortunate. I'm not sure what has happened there because we were having an incredible conversation here on the Passive Income Podcast with Tom, Savings Captain on Twitter. I can definitely hear you okay. And you suddenly lost my audio, which is extremely weird. I'm not sure. No audio. Yeah, you're just texting that to me or private chat. I time out. Tom's saying time out. Please be sure to join the Passive Income Posse by clicking that subscribe button below. We were just talking about Coca-Cola and being a dividend aristocrat, I believe, been increasing their dividend for, is it over 60, maybe over 65 years now?
Yeah, I believe they're one of the 35 or so kings that are out there. Yeah.
Oh, right. Sorry, king. Yeah, over
Yeah.
50 years as a king. I was thinking, yeah, I
Yeah.
quite often get the king, those terms backwards. Dividend aristocrat and dividend king. That's my bad.
Yeah.
Um, so yeah, we were talking about how you sort of saw this, I guess, path of the passive income and the dividends and just this money showing up in your brokerage account every quarter, right?
Yeah. Absolutely. And it's that, and how I got there and how I arrived at that. It was like I started reading, buy companies that you use. At the time, I had,
Right,
I was still in the brokerage industry. I think I had a a 12 pack a day habit to Diet Cokes. It was the first thing I would drink every day. So I'm like, that's a product I use. And I always thought it was pretty cool. Coca-Cola always said their biggest competitor was water, and I was
right.
like, they're going to be around.
Yeah, yeah,
So going back to like what we were talking about even earlier around technology, even even in the late 90s or early 2000s, I remember getting a dividend reinvestment book that I'd buy from Standard and Poor's for like $12. And Dave, I'm not going to kid you, it was a booklet. This is the kind of crap that's like available for free on 2 clicks right now on your iPhone. And I was
right.
like, yeah, a $10 minimum a month. You could invest in it. This was the drip program, and that was how archaic it was when I started doing that with Coca-Cola. But that was my first taste dealing with an individual stock that paid a dividend. And shortly after that, a friend and we got into Duke Energy, a big energy. It was just a Charlotte-based energy company at the time, but now
Right.
it's like one of the biggest utilities out there. So those are my first two plays, living the passive income lifestyle.
Nice. Charlotte, is that North or South Carolina?
It's North Carolina,
North
right on
Carolina.
the state line. Mm.
So I love that too because you said Diet Coke. I drank a lot every day, and so I invested in what I knew in. And you know what my mind immediately went to? Turn that cash register around.
That's right. I love that. I love that visual. That says it all. I'm paying you, pay me right back. Yeah.
Yeah, I'm gonna get you to pay me, to pay you, to pay me, to pay you.
Well, that's it. That was my exact thought process.
Awesome, awesome. And then so after that, I guess okay, so Coca-Cola, Duke Energy, obviously Duke has become a much bigger player
Mm.
than it was at that time. And let's just talk about the progression from there.
Mhm.
What other companies, what other sectors did you
Mhm.
get into after that?
Yeah, so the rest of my dividend producing portfolio to consist of names like this. Another one of my favorites, and the only REIT I own right now, is Realty Income, symbol
Yeah,
O.
ticker symbol O. It's a very popular one with 98 to 99% of the American guests who have been on the Passive Income podcast.
Yeah, I love it. I love the 15th of the month. I'm not going to kid you. I can't wait to Monday because the dividend train, it pulls into the station
Yeah, choo
for I think
choo.
the 634th consecutive month. And I love that it's down right now, trading in the low 60s. I still add to it. I still add every extra dollar that crosses my so that's my fave right now. So whenever I make a purchase, Dave, I almost run it through. Like if it's something I want, I'm like, gee, do I really want this? If it costs $120, I'm like, do I want this or do I want two more shares of Realty Income?
Yeah, and you're like, well, this $120 that I'm spending on whatever, I'm like, well, it's going to be gone in a week or two or less, and but if
Yeah,
I spend 120 on realty income, it's just going to, keep coming back to me every month,
every month.
every single month. So,
Exactly.
how many consecutive months did you say they had been paying a dividend?
I think I'm right by saying this. It's 634. And guess what? I was an actual broker in 90 when they went public, Dave. It was either 92 or 94. I had IPO shares available to offer to my clients, and guess what? I turned it down. We don't need that. Imagine that. I think it's had a 14% and change compound annual growth rate over that time.
Right. Wow.
Yeah. So when
Yeah,
I
and
say
again,
I'm reformed, aren't
you are.
I?
And again, back then you're, being the stockbroker and you're looking at these dividend yields of whatever percentage, you're thinking, yeah, I can see how you think I don't need that or I don't want that. I want my clients to buy these other whatever like speculative stocks or
Yeah,
something that I think I can double, triple, quadruple your money on. Whereas if I'm curious, do you remember what the price was on the IPO?
it was pretty low. I want to say it was um, probably a $10 or $12 IPO, and it's split. I think twice during its history. Yeah.
Yeah, wow. So anybody who was smart enough to get on in on the ground floor back then and i- is still with the realty income today, I'm sure they're quite happy with their returns.
Yeah, I've run the numbers. It kind of will depress you. Like you put something in, do a Google search. What would $10,000 be worth? At the IPO price, and it was staggering. It was well in the seven-figure range.
Yeah, wow. Wow. That's that's incredible.
I'm like, okay.
So we do have to talk. Well, let's talk a little bit more. Okay, a little bit more about your stocks, and then we'll get into talking about your new venture of being joining us here in the podcast host platform.
Uh-huh. Yeah.
But before we get into that, let's just talk a little bit more about your portfolio. So Coca Cola, Duke Energy, Realty Income O, and then let's just
Oh,
talk maybe a couple more that.
yeah. So, other one, this is one I'm real happy with that I've almost cut the cord on twice, and I'm like, no, Starbucks.
Oh yeah,
So I really have a good cost basis in that. I want to say it's below $30 a share. My yield on cost is looking really good. It's grown. So it's a classic case of, you know, it always reminds me. Sometimes I see information online or on Twitter where people would be chasing a dividend yield, but there's no growth. There's no chance that a
yeah,
company's growing. Like, look what happened to AT&T is a popular one right now, right? Where
yeah, yeah,
people chase dividend yield, the stock goes down and they cut the dividend in anyway. Intel. I used to own that one way back then. I needed the money for something at the time. That one worked out. Glad I got out of that. But Starbucks is just one of those great companies. I'm glad I've hung on to. I've gotten a couple times I got scared to get out of it, like with the lockdown in China and all the growth dependency. Then you start like thinking of U.S. Chinese relations get
yeah,
tight. What does that mean if they hanging that on the head? There used to be an old adage that the U.S. would never go to war with a company that had a McDonald's in it. Once we plant a flag somewhere, it's usually a safe nature. But we saw in Russia that was a little bit different when all the McDonald's closed in Russia a few
right.
years ago. So, but Starbucks, I'm going to hold on to it. I'm going to weather the storm, let it go, drip by drip. I always call, and I love it when I see all the drive-through packed with the soccer moms, and then the tweens and the teenage girls getting their $5 lattes. I'm like, yes, bring it on. Let's go. Let's go.
Oh, you mentioned chasing yields and guilty as charged. I've been there. I've chased some high yields, and
Mhm.
yeah, I've suffered through a lot of dividend cuts because of chasing high yields. So live and learn. Again, not financial advice, but do your own research because if they have a high yield, it's probably not sustainable.
It. So you've never day traded, but you've chased yields. I've
Yeah.
day traded, but I haven't chased yields. I don't know. Uh, but that's one thing I already haven't had to do my penance on is chasing yields. So I've always liked a little bit of the growth equation along with the dividend. It doesn't always have to have the highest yield. Two of my other faves that um, one is not too many people know this name. It's ticker symbol ORI, Old Republic. And I tell you what, that is a sleeper. They do title insurance. That's the big component of their industry. I bought that very early stage of the pandemic. Market was still, doing well, and it was before we had the bloodbath of last year, where most of the major averages were down double digits. Dave, I have loved so there's three things I enjoy about it. One, it's been consistent. The share price has been between 21 and $25. Very low beta.
Right.
Um, so that was a good addition to my portfolio. I needed something with a lower beta. It pays 350, maybe 380. That's what the yield is right now. But the third thing I've liked about it is 4 out of the last 5 years, they've paid a special dividend it, of at least $1 a share, $1 to $1.50 a share. Boy, that really has kickstarted. I
Yeah,
have to
that's
go
nice.
back. I don't keep the best records on my own yield of cost down to that level. I'm sure the yield of cost in 3 or so years is getting pretty attractive right now.
Nice. Yeah. Yeah, and those yeah, I love those too. All of a sudden, a special dividend or special distribution of a dollar or $1.50 is incredible, right? Like 'cause
Yeah.
all of a sudden, only 100 shares, and it's like, hey, you just gave me another $100. Perfect. Thank you so much. Right.
It's like I've gotten three of those. I'm like, okay, in 3 years of dividends. And the thing never, I mean, it's like it never goes below 21. It's almost like such a stable share price.
Wow.
So that's been a good one. And then I finally gave in. I always preach about being a long-term investor now and don't time the market.
Yeah.
The best time to buy is now. Even if a correction occurs, your future self is going to thank you. So I do violate that rule, and there's two stocks I've never bought that I've always wanted to buy, and I've been waiting for at least 10 years to buy them. One I just bought a month, maybe it was 2 months ago. I bought Costco. Shop
Nice.
there all the time. I don't get too mad. When I first started buying Starbucks, it was between Starbucks and Costco, I believe. And
Right. Yeah.
Starbucks was like at $140. And I'm like, you know what? I'll wait till it goes down to 130. Never all that again. So I would have been better in Costco, but the not too long ago I bit the bullet around 490 and just said,
Wow.
going in. It's like diving in the deep end of the swimming pool.
Yeah.
First day of summer, you don't care how cold it is, you're going right in. And I did. And I just wanted to own it. And then the other one is McDonald's. I'm like, that's one, like, why have I not owned it?
Yeah.
Why have I not owned it? Well, I'm a little bit heavy because I completely forgot about another sleeper, Walmart, that I've had the better part of 20 years that I've just reinvested dividends. And it's just one of those, you know, if I can get 2 or 3% higher total return than the US Treasury, I'll take it. I can sleep at night. I forget about that one. I forgot about that one.
I don't think Walmart's a sleeper. Like,
No, it's not
Walmart.
good. It's not pretty good.
Yeah.
But I don't know why I forgot about that one because that one came in. It was either right after Coca Cola or just before Duke. It was the second or third
Yeah.
individual stock. So Other than that, I'm a pretty boring guy with my portfolio now. I wish I had hot stock tips. I do. I'm on week 8 of the SCHD challenge. Before I got into the Twitter scene, I had been looking at a high yield ETF. So I'm in week 8 of that. Don't know what took me so long. I'm on board now.
Nice.
And my non-dividend producing, what I would call speculative hold that I waited on, I've bought Uber a long time ago. It has sat and done nothing. It's starting to break out. If I'm probably going to punch out of that sometime soon. And with the speculative portion of my portfolio that I keep it below 5%, I'm really eyeing um, an EV charging company called ChargePoint.
Right.
And the reason I'm thinking about that is, I see all these EV makers duking it out and they're fighting margins right now. Then you see the lithium makers. So I'm like, well, I don't really care who survives. I just want to charge whoever survives and have the
Have them
ultimate
pay me to
network.
not work for them.
Yeah, so at $8 or $9, I've been watching it for a long time. What did Warren Buffett says? I'm going to botch the quote. It's kind of like he says like research it or take a long time reviewing something but act quickly. So I'm taking like almost like a Warren Buffett approach
Yeah,
to a
yeah.
Warren Buffett type holding. Like there's no rush. If I buy it at 7, 8, or 9, if the thing is going to work out long term, it don't matter if you get in 7, 8, or 9 if it's a 10 bagger.
Yeah, yeah, for sure.
That's kind of me in a nutshell, Dave, and how the Tom the savings captain runs his portfolio.
Yeah. No, and that's awesome, amazing because I heard a lot of things there. So, off the top, SEHD, that's number one highest on my watch list for US companies or US stocks that are ETFs that I want to invest in. It's far and away number one. Um, and then so many blue chip American companies that you're investing in: Walmart, Coca Cola, now Costco. Finally, I can't even remember all the ones that you named, but like just all these great American companies that are not just in the US, they're in Canada and so many other countries around the world. McDonald's you mentioned as well. Obviously, McDonald's and Coca-Cola are in almost every country in the world, probably except maybe North Korea and Cuba are probably the only two
Yeah.
countries they're not in. Um, and so yeah, just amazing portfolio of these just solid blue chip companies, dividend kings, dividend aristocrats. They just keep paying you. You just keep rolling that passive income and it just keeps coming and that snowball just keeps getting bigger and bigger. My question, I guess, is a lot of those same companies are in SCHD. So I guess what are your thoughts there about sort of I guess you're kind of doubling down, right? You own the companies individually and they're also within the SCHD basket of companies.
Yeah, I'm tripling down in certain cases, right? So because I also own the majority of my holding, probably 75, 80% are we hadn't even talked about. That's like 401k, Roth IRA stuff that are in a lot of them are just in old school mutual funds, index
Right.
funds or large cap funds. So you'd think those holdings bleed across 3 portfolios. Um, I when I look at SCHD, when I think of that particularly, at least it's given me game in some dividend stocks that I haven't pulled the trigger on and bought individually, and it makes me feel better. Like ABBV, that's one I've wish I'd owned, and I don't feel half as bad for not owning it because, like you say, I own it through SCHD. Um, I joke on Twitter if I had to look at all the great ideas I see every day, I'd have to I'd have to mortgage the house again or something
Yeah.
to.
Yeah. That's another one of my sayings is, this isn't Pokemon, you can't catch them all, right? Like, you see all
Yeah,
these it's like, "Oh, I'd like to buy that company. Oh, that company. Oh, I'd like to buy that company." It's like, "Oh, whoa, 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 I don't wanna all of a sudden have 70, 80, 90 different companies in my portfolio. I wanna limit this to whatever number you feel comfortable with." For me, it's in that right now I'm below 25, and I think I'd feel comfortable going up to as high as 30, but and that's including ETFs as well. So that's a total number of positions is, I believe, 22 or 3 right now.
Nice. That's great. Yeah, I gave that whole thing a condition where, like a syndrome, a medical condition. If you want to buy everything you see, I call it investment envy syndrome.
Yeah. Oh, wow. Let's talk about the Money Happy Hour podcast coming soon to podcast platforms near you.
Yeah, I'd love to talk about that. So, um, this is my passion project. This is my baby. So I left the financial services industry. I've left the 9 to 5. I personally only work when I want to work at what I want to work. If I don't want to do something, it's so nice to have that flexibility in life. So when I left the financial services industry, Dave, the one thing I wanted to do was still utilize some of my knowledge and continue learning and helping people. So the big mission with the Money Happy Hour is to kind of make the whole concept, I think kind of what you do on this podcast on your YouTube channel already, is make the topic of money fun.
Yeah.
Don't you feel people feel alienated a little bit? Well, I'm not good with math. I didn't go to school. I never learned about this. And they kind of shy away from money. Do you get that sense in talking with people?
Uh, Not so much, but I know what you're talking about, and I'll tell you the reason. So, first, I will put the link to this in the description below. As you can see there, all sorts of audio platforms. I believe Spotify, Apple Music, all your favorite Amazon Music, all your favorite podcast platforms. And so, I will put the link in the description below. Um, to answer your question, Tom, a little bit different, and you'll find this too when you start talking to people on your podcast, is that for the most part, we're like-minded people, so
That
we get it. We're like, "Okay, yeah, I need to first you need to start investing." I call that my Moneyball reference. You know the movie Moneyball? Just get on base. Just get on base, right?
yeah,
And so, yeah, a lot of us are like-minded, so we understand you just gotta get on base, you gotta get started, and then you've got a DCA, dollar cost average, every paycheck, every second Thursday, every second Friday, whenever you get, go and sell something on Marketplace or whatever, and every time you have that extra 50, $100, buy those, dividend paying stocks. But I definitely get what you're saying too, kinda to the point of your question of people that are like, "Oh, I'm not good at math," or "I don't understand investing," or "I don't." And yeah, I still feel that's probably the majority of people. We've talked about it becoming a lot easier these days with the information being there. You can watch YouTube videos, you can search Google, you can go to Investopedia and all sorts of great resources. Like I said earlier, you can just ask people on Twitter, right, or ask people on whatever social media platform. So yeah, I guess what I'm saying is there's kind of a yes and no to your question. Like, the yes being a lot of us are like-minded, but the other part of, yeah, there's a lot of other people out there that just
that
have not educated themselves.
exactly. So that's the audience. That's a great observation. I should have backed up and clarified my question before I threw it out there. You're exactly right. The people that were talking with daily on Div Twit, like we get it, right?
Yeah.
We've cracked it. We've so the podcast is really going to work through 3 streams. I call it planning. I don't even use the word budgeting. I call it planning, like financial freedom planning, saving money, and that's kind of where I borrow the savings captain name from, because if you ain't saving, you're not investing. If you're investing, you've got to be saving something to put into your investment. It's like the catalyst to everything, to financial health. So it's plan, save, invest, and then live your best life. Don't get so caught up in chasing the dollar. You can't live a complete life and enjoy some of the journey. So we're going to destigmatize the whole concept around that. We're going to make it, I joke, it's a podcast that's 32 years in the making. We're going to get a podcast that's taken 32 years to come out with, but that's what it is. So I'm going to tie everything that I've come across, and hopefully better people. And there's going to be a lot of guests on there that in the first few episodes, I'm going to have some millennials that have somehow figured it out, right?
Yeah.
If somehow got on the right path, they're going to be fine. We're going to talk about people that are, maybe almost Dave Ramsey style, dug out of debt, right? And now they're investing to encourage people. We're going to have people on there like you, I, of our ilk, that have kind of figured it out, right? How you actually invest for dividends, and we're just gonna take it brick by brick, almost like building a dividend portfolio. So that's why I call it my passion project. We're going to touch 125,000 people by 2025, where they can, raise their hand and say, "Yep, to some degree, my finances are better." It could be
Nice.
as little as I couldn't save my first $1,000 to, yeah, I've been investing for 10 years, but this is the first time I know what I'm doing and it makes sense, right?
Yeah, amazing, amazing. So, well, first, welcome to the podcast platform. As my audience knows, I'm very lacking at uploading to Spotify and the other audio platforms. I'm very consistent at uploading to YouTube and the video podcast genre on YouTube, but
Yeah.
at least I'm getting the content out there. So, like I said, welcome to the podcast platform. And I just want to kind of give a quick shout out to a couple of other podcasts who I've been guests on and who have been guests here on the Passive Income Podcast. Uh, Two other Canadians at Newcomer Investor Podcast. Anthony is incredible. The Dividend Guy podcast, Mike, he's incredible as well. His podcast, I believe, is Moose on the Loose, and of course, Canadian Moose. That's just and then Harris One Penny Podcast. I believe Harris is in Texas, if I'm not mistaken.
Yeah.
Harris has been a guest here, and I've been a guest on his podcast. And so, yeah, and actually, last shout out to Brandon, who does the Green Candle IT podcast, and he's got a little bit more Bitcoin in his, but and that's fine. But he also is into other, like, obviously stock investing and real estate investing and whatnot. So, I'm sure on behalf of all of us in the in the podcast community, and those are just the ones I that we all follow each other on Twitter. So be on behalf of all of us, welcome to the podcasting world.
Thank you. I appreciate that. It was almost like, I mean, you're an old pro at it, but it was, think back to when you did your first podcast, whether you did it by audio or video together. It's like the first day of school, figuring everything out again. Like, you know what you want to say, just getting the technology and instrumentation right. So,
Yeah,
yeah,
exactly.
excited though. We got the first one. It's scheduled to go live, hit all the directories, 6 a.m. Eastern time, Monday morning.
Oh, awesome, awesome. So everybody will be sure to be looking out for that one. And like I said, the link will be in the description below for the Money Happy Hour podcast.
Yeah.
And definitely too, yeah, look into getting, Anthony and Mike and Harris and Brandon as guests. And I guess one of my last questions is, when am I gonna be a guest?
Yeah, I tell you what, I was thinking not too far down. I'm mapping out my thing, and just on that little trailer I sent out, it's interesting to see you start getting the stats where people are listening in from, and I'm like, of course, a lot of U.S. and guess what country is number two?
Yeah, Canada.
Just across the border. Yeah, so yeah, I'm gonna have to get some Canadian representation soon, and again, it's going to be a pretty light and chill conversation that we're going to have.
Awesome.
Like,
Yeah.
we got to help so many people out there that it's almost our duty. Like, we can keep making each other better as dividend investors, long-term investors, whatever we want to call ourselves, and that's great to be in community with like-minded people. But at some point, it's like there's a whole big population out there. They just need to hear the message. And
Yeah.
if we can bring that to him, I'd love to be the person that carries the water, so to speak, to make that happen.
Great points. Love it. Love the I'm sure you're gonna have incredible content, incredible guests, and I can hardly wait to be a guest myself. So yeah, anytime, just let me know and we'll figure something out when our schedules mesh and
Absolutely.
I'll be more than happy to come on and spend an hour talking about all the mistakes I've made as an investor.
That's good. Yeah, I'm the first few episodes will be detailing my mistakes as an investor, so I'll get those out of the way.
Nice, nice. Before we go, and I did kind of want to bring this up because obviously, you're knowledgeable in um, the stocks on both sides of the border. You'd mentioned Jones Soda, which kind of caught me off guard a little bit. Um, I- let's talk about just briefly the banking sector. Um, there's a lot going on in the U.S. with regional banks, and then I'm sure you're well aware of how strong the Canadian banks are, and I guess maybe just the differences of like
Mhm.
why that is. Why are there bank failures in the US that we hear about all the time, and then we have these Canadian banks that are in incredibly strong that I don't wanna use the term too big to fail because, Credit Suisse was also too big to fail, but I guess just thoughts on the banking sector before we sign off.
Yeah, I didn't answer the question. We got so tied up talking about stocks. So you asked a couple things I never have really invested in much. There's two sectors I've never really been favored. Airlines are one. I don't think I've ever seen one make money. One.
Yeah, it's a
The
tough
other
go.
too far behind it is banks. And I felt a little bit better after Warren Buffett's comments the other day after his shareholders meeting. Right now, he doesn't own any banks. He might own some Bank of America indirectly, but that's the only other thing. I don't really particularly care for bank stocks. I have a, I wouldn't say I'm a big uh, social investor or anything by that standpoint, but I just don't really like the big mega banks. I think
Right.
predatory in nature. So I have a fundamental problem with that. Another thing, I just don't care for banks, and I own them indirectly, obviously, in index funds and such. But to just go and pony up and start, there's so many other good ideas I'd rather look at across industries. My opinion on why there's a difference in the U.S. and Canada. I'm speculating on this. I'm not a Canadian bank expert. I would likely think in the US, we have what's called more regional banks than you have
Yeah.
in Canada. Is that fair to say?
Oh, by like you have thousands more regional banks.
And 20 years ago, it was even more
More
extent.
of them. Yeah, yeah.
And what ended up happening was the mega banks bought some regional banks. It was like a feeding frenzy, a food chain in banking. The regional banks would buy the small community banks. And so the number of banks in the US, I'd say it's down tenfold in 20 years. I'm probably pretty close with that stat.
Yeah, that sounds right.
That's about the big difference in the US. And I think some of the failures you're having right now are getting called out where you have, a perfect storm, right? A perfect storm where assets on regional banks right now, um, debts are at lower rates. Now rates are higher. So what's happening? There's not as much backstop there. Deposits are flowing out and it creates a cycle. And then the bigger banks just get bigger. So I think that's a unique dynamic in the US. And that's just getting called out a little bit more. But imagine in Canada, it's a little more insulated. I don't think you would have yeah, I think you have a even higher concentration of deposits in banks.
Yeah, yeah. So interesting point again, going back to just this past weekend's live stream with the Young Guns. Tanner was actually who was the oldest of the Young Guns at 25, actually works in the banking industry, and he was saying that his boss or the CEO of the bank he works at mentioned that yeah, there used to be 50,000 different regional banks in the U.S. and it's down to 5,000 now. And he kind of after the live stream, he fact checked himself, and he was still pretty close, so I'll give him that.
Yeah,
And I was like, "I don't think there's more than, 15 or 20 banks total in Canada," and I literally had to, like, Google and Wikipedia,
yeah,
uh, and So yeah, there's like the big 6 banks, and then when I first Googled it, I only got 4 more. I only got like a total of 10 on my first Google search. I'm like,
Go.
"Okay." And then I actually tweeted about it, and people started like, "Okay, there's a few more," and they sent me some links. But yeah, I would say between like banks and credit unions combined, maybe 50 different ones. Like,
Oh,
so yeah, very, very different in just the number of different companies that are banks.
you Dave, I can look in Charlotte, North Carolina. I'm sure between banks and credit unions, I can come up with more than 50 unique names.
Just in one city, whereas, like, I'm talking about a country from the Atlantic to the Pacific to the Arctic.
Exactly. Yeah.
Okay, well, awesome. With that said, this has been an incredible conversation again. We've had so many incredible conversations here on the Passive Income Podcast. Episode number 70. We're well into the 70s now. I'm not even sure what number. And thank you so much, Tom, for coming on and spending time with us here on the Passive Income Podcast. Any last words before we sign off?
No, I just want to say thanks for having me on. I really appreciate that. Going down memory lane, a chance to give my testimony on investing, and a plug for the Money Happy Hour. So I'll,
Awesome.
we'll be in touch very soon on that, Dave.
Awesome. Thank you so much again for your time. And if you're still watching, please be sure to hit that subscribe button below. Subscribe.